Greetings on a hot August day in the summer of 2020. What a year this has been in real estate. We're up, we're down, we're all over the place. Right now in August, Newport and most coastal areas of Rhode Island are experiencing crazy sellers markets. And that might make you think that it's a really hard time to buy a house and it's more expensive than ever. But guess what? Given the mortgage rates, it's actually cheaper. I'm Sandy Warner, and let's talk about how mortgage rates can affect your purchase power. If we look at, I'm going to put up a little graphic here and show you what a payment looks like on a $300,000 house in the last 5 decades. We're going to look at starting in 1970 all the way through the 2010s, and then compare that with today. If you were to purchase a house for $300,000 in 1970, where the average interest rate was 8.86, your payment would be $2,384 a month. That's just principal and interest, and of course some people will add prepaids in there. But principal and interest, it would have cost you $2,384 to buy that mid-range house. In the 1980s, at 12.7%, that's right, interest rates were 12.7% in the 1980s. It's when most of your parents were buying houses. It would have cost you $3,248 to buy a $300,000 home. That's $900 more a month than it cost the decade before. In the 1990s, we saw interest rates come back down to the 8% range, and it dropped to $2,267 a month. So for $1,000 less a month, you could buy the same house. You had more purchasing power. In the 2000s, we saw interest rates down at 6.29. Guess what happened? Payments went down. You could buy that same house for $1,855 a month. 2010s, they were at 4%. You could buy it for $1,448 a month, $1,448 a month. Well, guess what? Right now, interest rates are at 3%. 3.3, 2.9, pick a day. It's a different rate every day right now. At a 2.96% interest rate, which is what we saw last month, it was $1,258 a month to purchase that same $300,000 home. Well, what does that mean? When we have interest rates this low, your purchasing power goes up. If your mortgage payment consists of your actual principal, which is if you borrowed $300,000 and you borrowed it for 360 months, you take $300,000 divided by 360 months, that's your principal payment. Your interest is added on top of that. If that interest is lower, so if you're paying 12% interest versus 3% interest, that's a difference of $400 to $500 a month just in interest. So yeah, we're in a seller's market right now, and home prices are going up. Home prices have seen an increase every month for the last 96 months, I saw somewhere. But you still have more purchasing power today than someone did just 5 years ago. Something to think about. If you want to talk about buying a home, give us a call at Warner Realty Group. Call the office at 401-236-8685 or check out our website at www.wrgri.com. Hope you're staying cool in this August heat. Bye.